Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys, let's take a look again on the euro currency. So yesterday was really significant rally on the market. We talked about this in our weekly report that after minor retracement market really has chance to continue move higher. We talked about the reverse head and shoulders pattern that we saw on the hourly chart, and on the daily chart it also was signs of the possible upward action, because here, as you remember, was agreement with the COP target. Once it has been hit and formed the wash and rinse of these lows, formed the reversal candle, which also suggests that the upward action should happen. So fundamentally that was supported by the ISM data that was poor, below the 50 level, and which means that contraction of the economy, and it's a bit worse than market expected. Besides, Donald Trump again has shaken the world with the new ideas of the tariffs on the steel export on Brazil, on the Argentina. Some tariffs also were announced on the France luxury goods. So this is cheese, champagne, bags. So approximately it's count for 2.6 or 2.3, well, above the 2 billion euros. All this stuff, of course, it was not treated as a positive. You can see the reversal on the stock market as well. By the way, guys, if you're trading the stocks, you could find on the DAX index double repo sell pattern on the daily chart. So this was a pretty nice pattern. This is for those of you who are trading the stock markets or stock indexes. So euro also has shown reaction on the poor ISM data, and you can see the dollar has dropped and euro shows this rally. What we have right now, market stands, it has completed our intraday targets that we have suggested, and even has exceeded it. But in general, you can see market right now stands at the resistance. So this is 111 area. And now, today in a few hours, I suggest that we will probably get some minor pullback here. Also, market has climbed above the December pivot point, as you can see, which indicates this bullish sentiment. At the same time, as market stands not at the oversold, not at the overbought, I do not suggest that it will be a really deep retracement. So probably minor pullback here. On the daily chart, now we have the major pattern that provides us the target is this ABC bottom, which suggests the minimum target stands around the previous top, so 1164. This is the COP extension of this AB leg. So ABC bottom, 618 extension right here. That's approximately the target we will keep an eye on. Meantime, on the intraday chart, here we probably also could suggest a different pattern, which is called the double bottom, because we have all typical things for a double bottom pattern. So first of all, take a look. First drop on the starting of the second bottom, wash and rinse at the second bottom to the first one. This is all classical signs of the double bottom pattern. Rally on the slope by the end of the pattern. So this indicates the shift of the sentiment, which is really good. That was our minor hand shoulders, if you remember. We talked about an hourly chart when we said that probably we should take the position around 110, 110.04 area. And you can see this was completed almost pips to pips on 10.02. Market rallied up. We talked about 1052 target. This was the 618 resistance, and the AB equals CD targets, AB CD OP target. But it was supported by the ISM data. Market has skyrocketed right to the XOP, and now it stands tight around the top. If you all calculate the classical target of the double bottom itself, you will get approximately the same target. It's 1184, while COP stands at 1164, just 20 pips difference, so it's not really big deal. Currently, as you can see, market is forming, I would say, kind of the pennant pattern or something of that sort. So which also indicates and suggests the probable upward continuation as well. So in the current situation, I would suggest, if a retracement will be, probably will be somewhere to the 1050, 1055 area, because this also was the disrespected 618 resistance of this recent drop. So market has passed through it as it now exists. Now it will work as support as well. And also we have here those two fib levels in 1048, 1056. That's most probable destination point of the possible retracement if we will get any. Some kind of the ABC pattern maybe will be formed, minor pattern on the hourly chart. But it's not the fact. I do not exclude the chance that market really could just show the breakout here as well. But if retracement will happen, that will be the point that you could keep an eye on. Maybe minor guardian steeple to buy here will be formed. And then I would suggest that market should continue upward direction, because in general, overall momentum is really strong, and at least some upward continuation should happen. So currently we are watching for 1064, approximately 1084 area. So that's the setup that we will keep an eye on in the nearest days probably.